In the luxury market, 13 contracts signed at $4 million and above. Mint condition properties are being rewarded and they are going into contract quite quickly if they're priced well. Off market 120, almost 97% rise in off market. Welcome to this week's look at the state of the New York City real estate market, where I take a look at the luxury market, the Manhattan market, and the Brooklyn market. I do it because I want you to be informed. It never hurts when you're a consumer to be informed. Welcome to this week's look at the state of the New York City real estate market. This is for the week of July 31st to August 6th. We're going to get started, as we always do, with the luxury market. Then we're going to move to the Manhattan market. Then we'll take a look at the Brooklyn market. Then I'll sum it all up, give you my thoughts and my takeaways. Be sure to post your questions below. I'm always happy to answer those for you. In the luxury market last week, there were 13 contracts signed for properties that were priced at $4 million and above. That is 6 fewer than the previous week. Condos outsold co-ops 6-4, and there were 3 townhouses in that group. This total last week was actually the lowest since the last week in December, when 13 contracts were also signed. The number one contract last week was apartment 48N at 50 West 66th Street. It was asking $23 million. It started marketing off of floor plans last summer. Condo has almost 3,400 square feet. It includes 4 bedrooms and 4.5 bathrooms. Ceilings are 13 feet high. It has views of Central Park and also the Hudson River. It also has a 147 square foot loggia off the living room. Amenities in this 39-story, 122-unit condo building include Doorman Fitness Center, indoor lap pool, outdoor saltwater pool and jacuzzi, basketball and pickleball courts, screening room, game room, bike room, and the ever popular dog washing facility. The number 2 contract was 33C at 15 Central Park West, one of my favorite buildings, asking almost $19 million. It was reduced from almost $20 million when it was listed back in June of 2022. The condo has 2,761 square feet. It includes 3 bedrooms and 3.5 bathrooms, a living room, formal dining room, and a 3rd bedroom, library. Face Central Park. The owner purchased the apartment from the sponsor in 2008 for a little over $10 million. This very special building was designed by architect Robert A.M. Stern, and the amenities include a 14,000 square foot fitness center with a 75-foot pool, private restaurant for residents only, a landscape motor court and garage, library, business center, game room, outdoor terrace, and children's playroom. If we take a look at the quick stats for last week for the luxury market, the total weekly asking price sales volume, 124,360,000. Average asking price, 9,566,154. Median asking price, 6,950,000. Average discount from original ask to last asking price, 3%. Average days on market, 397. That's it for the luxury market. Be sure you post your questions below. We're going to move on now, see what happened last week in Manhattan. August is here and we see supply dropping fast in Manhattan. 210 properties came on the market last week. That is a decline of about 6.2%. Contracts signed also declined a bit. 184 were signed for the week, 4.2% decline. And off-market properties rose. 282 properties came off the market. That is up 52.40%. If we take a look at the monthly chart for Manhattan, we see that inventory 1,010 for the month came on the market. That is down 16.2%. 2%. Contract signed 825, down 12%. Off market 931, that's up almost 30%. Essentially, what we're seeing is that contract activity is moving down for sure, just not as fast as the inventory is declining. If we take a look at this market pulse chart, it's a bit deceiving, would suggest that we are in some kind of seller's market. We're really not. It's just that the inventory is falling faster than the demand. This liquidity pace chart is interesting. It is a 30-day moving window, 825 contracts signed over the last 30 days. It's going to be interesting to see if you look towards the end of the chart, you will see that the contracts have really fallen off. That's really where it's declining. Earlier, May was higher. Once we get further into August, we're going to really very likely see that this number is going to fall even further. If we look at the supply for Manhattan, it continues its drift lower. It remains at the lowest level for the last 5 years. The demand, as measured by pending sales, crossed 2022's level, and it's something for us to keep an eye on. We're kind of moving sideways. Yes, we're going down a bit. Again, not quite as much as we're seeing the inventory fall. So it's not terrible, this demand, but again, yes, we're just going to keep an eye on it because we're just not quite sure what will happen. August is going to be a very telling month for us. The weekly new listings dropped again, and while they're quite close to seasonal levels, they're really even lower than usual. The contract signed ticked up a bit, and they remain kind of at a level consistent with 21 and 22. They're kind of moving sideways a little bit. Down overall, but still not too bad. This chart, the spring versus summer, this is a comparative chart this year to other years. We're seeing the seasonality returning in terms of the gap between the spring and summer, but it is lower this year than in 21 or 22. So we're not seeing quite as much of a gap between our spring market and our summer market. That's it for Manhattan. We're going to move on now. We're going to talk about Brooklyn. Be sure you stick around, though. After Brooklyn, we'll kind of sum it all up, give you my thoughts and takeaways for buyers. There's some interesting times coming up. Definitely want to stick around if you're an active buyer or seller in this market to get those takeaways so that you can be making some great decisions. In Brooklyn, we're definitely seeing a similar kind of scenario to what we're seeing in Manhattan, although Brooklyn is faring a little better than Manhattan. And interestingly, for the week, we saw a little bit of an uptick in the supply. 167 properties came on the market. That is up just a smidge, 1.2% for the week. And contract signed, kind of a wash, 148. Off market, 120, almost 97% rise in off market properties. The supply for the month, 722, that's down almost 11%. Contract signed down 10%, 602. Off market rose for the month, a little over 19%, 356. As you can see, similar story in Brooklyn as to Manhattan. Just can't keep enough inventory in for the number of buyers. A similar kind of market pulse reading. Definitely a hotter market from the standpoint of more interested buyers than in Manhattan, but not really quite a seller's market. That chart is, as with Manhattan, is a little deceiving. If we look at the liquidity pace chart, it's different for sure. You can see that the liquidity has risen, unlike Manhattan, which was declining. You can see that 30-day moving window has started to rise again. So in Brooklyn, we're definitely seeing an uptick in the contract activity. And if we take a look at the supply, we see, as you saw from the other chart, the Brooklyn supply continues to fade, and the demand appears to be accelerating crossing the 2022 level on the upside. The new listings appear to be moving sideways, but at a lower level. And the contract signed, the deal volume is moving sideways. It's suggesting a bit of strength in this summer market in these early August days, definitely better than in Manhattan. And if we look at this gap in this spring versus summer, we have going back, let's say, these same 3 years, we didn't see much of a gap in 2021 between the summer and the spring market. We saw more of that in 2022. 2023, we're not seeing much of a gap at all. It's almost non-existent this summer. That's it for Brooklyn. Be sure you post your questions. Now, here are the takeaways from this last week. In the luxury market, 13 contracts signed at $4 million and above. 5 of these contracts were in the trophy property category, properties that were priced at $10 million and above. 8 of those properties were uptown, 7 of those were downtown, 6 of those were condos, 4 of those were co-ops, and 3 of those were townhouses. In Manhattan and in Brooklyn, the supply is dropping fast in both of those markets, and the off-market properties are rising fast in both markets. The demand is not bad in Manhattan. It's down a little bit in Brooklyn if you look at the kind of weekly, monthly chart. However, overall, the demand is not really falling. Let's say it's just kind of moving sideways. So it's definitely stronger in Brooklyn, definitely better to be a seller in Brooklyn. And here's something else to note. The properties that are in mint condition across the board, whether it's in Manhattan or in Brooklyn or just a regular property, those mint condition properties are being rewarded and they are going into contract quite quickly if they're priced well. Why? Because buyers don't want to really be doing work right now. They want something they can buy and just move into. That is the appetite of this market, of the buyers. They want something that feels fairly priced. They want something that they can move right into. And overall, they seem to be preferring condos to co-ops. So what if you are a seller in this market and perhaps you are experiencing some difficulty and perhaps you have a property that does not fall into the category of mint condition, or perhaps you've been on the market at least 30 days and you're getting a little pushback on your price. Here are some things that you can consider if you're serious about selling. Maybe you want to regroup, think about adjusting your price and coming back on the market mid-September when the market starts to pick up, maybe a little earlier than mid-September. Try to get out ahead of the other new listings that are likely to come on the market. The last option that is available really to anybody who owns a property is if you don't have to sell and you don't like what the market is holding for you, then you can take your property off the market and wait. You might have to wait quite a long time. We're not seeing any indicators that this market is going to turn around anytime soon and that prices are going to go up. But if you want to hang on to it, it's certainly your right to do so. Buyers, it depends on your price point, depends on which borough you're focused on. If you're a Brooklyn buyer, it could be a tough market for you to get some traction, but you may have a lot more competition. In Manhattan, you may have less competition, especially for those properties that have been around for a while. But if something has just come on the market and it's well priced, you may not have a lot of leverage and you may have other buyers who are competing for the same properties that you're going to get some kind of great deal. So if you really love something and you've been looking for a while and you can see that it's fairly priced, you may have to get quite close to the asking price to secure that property. For those buyers that aren't really in a rush, you might want to wait. Probably in a few weeks, you're going to start to really see the inventory decline a little bit more, and you're going to see contract activity fall off a little bit more. That's definitely going to be a buy signal. Don't wait because when the inventory starts coming on in the fall and more buyers come back into the market, your window of opportunity will have closed and the market's going to start to go back up. So don't wait too long. Next few weeks, just keep listening to these reports. I will definitely let you know when the buy signal is here. But for right now, we are fast approaching that, probably the next few weeks. That's it for this week's look at the state of the New York City real estate market. As always, my thanks to Urban Dakes and to the Olshan Luxury Market Report. The work that they do helps me to help you to make great decisions. I will be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.